Hi, Warriors. Patrick, Paul, AJ, the whole crew. How are you guys? Team, how are you guys doing?
Good morning, Dale. Good morning, everybody.
Yeah, Kman.
Morning.
Stel, how are you, buddy? So here come my charts. All right. So a little bit of dollar sell-off today. Pound still the leader. I kind of thought we could get maybe, yeah, we almost did 480. So I tried the euro long. I've already taken half from yesterday and BE stops. I don't know. I'm not convinced, but I'll give it a chance. If we roll over here, regardless of whether we push up one more time, I know that a lot of valuations are saying that this pullback in the dollar is a 4 and we need a 5. But I still think eventually we're going to be able to buy this dollar 102.5 or so, maybe 102, whether it's sooner or later. I think this area is going to come into play. That's just a 2-hour chart, but you look at, say, for example, the weekly, this 102 area, the daily, there's huge confluence there. You know, you're going to have a lot of long-term moving averages come in here. And I think that would be kind of equal if we go down from here, like ABC type of move. So that's what I'm looking for. To me, most things until we get there are just scalps. I'm not bearish the dollar, thinking that this was it and we're headed to new lows. A little surprised that gold is weak. You know, I think this gold, it's a magnet, this line that Blake turned me on to a few months ago, coming in around 1916. I think we get down there, we'll have a better bounce. And I don't think this is going to be it either. You know, we've had a bull run for, I don't know, 6-8 months or so. So a few months of consolidation. I'm thinking August for gold buys. And I actually think it's going to be down here. Silver, I actually think it's going to be 2050. So 22, you're going to get a big reaction off that. And like Stel said, 24.5. Stel will call this no man's land. If you watch any World War I movies, trench warfare, you don't want to be in nowhere's land, no man's land, do you, Stel? I mean, you know, it
No,
always
but
looks
and then unless you have a very short time frame, it's very tempting to get involved, but very difficult to just say stay back and say no. I wait for the market to come to my levels.
Yeah, and like Tom Petty says, the waiting is the hardest part. He must have traded. So
he was also free falling, though. Remember?
yeah. And we all know what that's like. So someone who overcame free falling many years ago came in. Your reaction to yen coming off a little bit, do you think?
It's exactly as you say. I mean, this we are in kind of ranges, right? We are waiting for the next event on the dollar. If you only look at the dollar side, we're waiting for the next event, which is next week, really, the CPI and then the FOMC, and then you have a whole host of the major central banks out next week as well. And I reckon the market is already there, waiting for it. So you have little incentive to drive the dollar much higher and little to sell it off. What may be interesting is tomorrow we start to see the short-term bills issuances by the Treasury. That may give some algo blips as well. But I really think for the dollar, it's going to possibly be decided on the next decent move, I would say, next week. And now we are trading the other side of the pairs, right? We are trading Aussie, we're trading a bit of yen, and then especially this afternoon we're going to trade Canada. Tomorrow we likely are going to trade a bit of MEX because we got a quite big rendezvous with CPI and PPI out of Mexico. So this week is to me, going to be marked more by what's the other side of dollar pairs, or what's the other currencies, what are the other currencies doing.
Okay. So USD MEX, I'm looking forward. I haven't seen it in a while.
17.25 is the 61.8 of the whole move since 2014, I think, up to the highs of the pandemic, which are a bit subjective, of course, but that should be a big level, especially seeing how the MEX has behaved over the past months. And any setback in MEX has been bought. We know that many investors have been piling into Mexico. So tomorrow we could see either a continuation or the first setbacks, and we can't exclude either of them. If we get a big setback in CPI, PPI, makes May, I think, suffer a bit just because it's been so strong over the past year and a half, really.
Yeah, technically a glaring divergence on the daily, and a potential drive two. This would be one, this would be two. We'd get a rally and one more sell-off. Let me look at a lower time frame. So this looks like an interesting position trade setting up here. 4 hours starting to diverge. So maybe an important low coming in here in the next few weeks, as you know, it has to go through some accumulation, make a low, and then stop the bottom pickers out a few times till they're exhausted.
Yeah, I think those bottom pickers have already been
oh yeah,
a little
oh yeah, they're going. There's not, I wouldn't say, I'd say there's probably not a lot of longs left, but you know, there's always bottom and top pickers, right? So you know, we got these stops now today.
The issue is it's been tough to fight it, because you're looking at an 11% currency, which is very tough to be short of for long, right? So I think globally, and as I said as well, the investors have been piling into Mexico. They've been so positive in Mexico, but we know that every story has an end. So perhaps tomorrow it could be the first sign. I don't know. We'll see.
Okay, well, you know, thank you for drawing everyone's attention to it. I know Blake talks about it a lot too, but I'm certainly paying attention to it. Maybe we're even getting to objectives after this. You know, it's the only line I have here was this breakdown here. So maybe we've already covered this ground from here to here, and then here to here. Weekly's diverging to above 30. So I'm going to be I'll be stalking it, sipping on Coronas, and dreaming about being long a lot of US dollar MEX. So if you're long, you're going to get the carry going the other way.
If you're long dollar MEX, you're paying the carry, right? So
right,
better be right relatively fast.
Okay. All right. Okay. So okay, nice look. Ryan's at a soccer game.
Yeah. He's in Prague.
Okay. Let's see.
Yeah.
I haven't heard. Hi, Steve. How have you been, bro?
I'm good, Dale. How have you been?
I've been okay, and just wondering what your thoughts are. You know, we're right about being sanguine about S&Ps. Dollar action telling you anything in here?
The dollar has clearly lost some of its prior upside momentum, right? We can clearly see this. We've been now, during the past couple of weeks, we've been consolidating roughly around a little bit higher, a little bit lower, the 104 area in the Dixie. I'm not convinced at all that we're done rebounding higher yet. We might be in a corrective consolidation of the overall correction in the DXY, because I'm still a believer that we're not going to see the highs again. But that doesn't mean that the move higher is completed. Clearly is doing some consolidating, but my gut feeling tells me we have a little bit more to go before it's over and done with.
All right, I think this is a real important chart, and I think I might be wrong. I thought about what Kman just said, that the Treasury is going to be selling more shorter term paper, which makes sense because, you know, if they're going to take rates down later, you know, they could refi. You know, but harder to refi with 20 and 30-year paper and 10-year paper. So I'm wondering what you think about the bond market in light of the debt ceiling being done. And
the bond market is a big shit show. I
Yeah.
remember Trump that was claiming that he wants to take advantage of the low rates to roll over the debt to longer maturities, which he didn't do. To be, you know, to
it
be,
would have been a smart play.
It would have been the smart play, undeniably. But to be fair with him, it's not that anybody before him did it. In fact, the duration of the bonds that the US has sold has been decreasing steadily for decades now, right? So instead of borrowing longer term, even when yields were ridiculously low, the US government is borrowing shorter term and shorter term. The result of that being that within the next 2 years, the US has to roll over half of its debt. Just think about that. If I'm not mistaken, the overall debt is now 31.5 trillion, if I'm not mistaken. Half of that needs to be rolled over within the next 2 years.
Wow. Yeah. Okay. So, I mean, even if we had a intermediate term bond rally, like certain people are looking for back to, you know, TLT back to 115, 120, you know, technically if it gets through 110,
for every month that passes, that the US has to roll over debt, the debt that replaces the one that matures, not to mention the newly created debt, because the debt keeps increasing, right? So it's not that they're just rolling over, you know, the previous debt, is that they're, you know, taking new debt as well, is obviously has to be repaid by paying much higher interest rates. Now, in my opinion, that undeniably will lead, of course, to the Federal Reserve monetizing tons and tons of debt within the next few years again. So it's not a matter of if, it's a matter of when the Fed's balance sheet is going to have another explosive increase from 10 trillion from 9 trillion to, who knows, 15, 20 trillion next. Who the hell knows?
Hold on, man. I'm going down to my bunker to finish the show. Anyway, you know, I can't get over, you know, I know it's really not contrarian to be bearish bonds, right? Because of all the things you just outlined that are, you know, going to happen. But I just can't get over the fact that we had this confirmed low in October.
Yeah, I don't think necessarily the bear bond thesis is the correct one, because as I said, since it's not sustainable, what will have to happen, they will have to suppress yields lower once again. But the combination of factors that have to happen for that to happen is they need to get inflation in check, and they need to have the Federal Reserve monetize the vast majority of the debt. So those two have to happen. That's why at the same time, they are holding rates for recent standards at quite high levels. We're at 5.25 now. We're considering raising another 25 basis points, going to 5.5. They want inflation to go down, so then they have, you know, an open road, an excuse to keep expanding the balance sheet.
Okay. Thanks, Steve.
My pleasure.
Good hearing. I mean, always get good fundamentals from you when you have no idea what to do in the market.
At the moment, my thesis remains dollar likely even higher, not perhaps not immediately, like within the next few days, but I don't think we're done.
Yeah.
And you know that I've remained bullish equities for, it has to be at least a couple of months now, and I don't see any reason to change that either.
Did you ride them? Go ahead, Blake.
No, absolutely not.
Yeah.
Well, I was going to say, Steve, you're do you just say you're constructive on the dollar?
Yes,
No.
not in the necessarily like today, tomorrow, but my gut feeling is that this rebound in the dollar is not done yet. I think we need to see a little bit more before the dollar can roll over and keep on, well, accelerating.
I'll share with you the intraday view that if you were
something like that.
Yeah,
something like that.
Yeah,
but in my opinion, it's going to probably break out higher, produce one more leg to the upside after this correction, and then we can likely call it the end of this rebound.
It has to hold 103 though. Has to hold 103.
Yeah, I agree, Stelios. I think 103 is really key. You've got the 103.20 is the 38% retracement. Just below that at 102.80 is the 50%. It's also the breakout point. I think that's going to be pretty critical. And Stelios, good to hear your voice.
Hello. I'm here. Sorry, I missed the flow show this morning, but I am back.
Oh, well, Dale, how
Jason Statham is back.
Who's back?
Jason Statham. Isn't that Stelios?
Oh, okay. That's right. Oh, now I know who you're talking about.
Did we lose Stelios?
Yeah. The Australian actor.
Is he Australian? Anyway,
I think
no.
I
think he's British.
He's British.
Guys,
yeah,
he's British.
I think that you're right.
Same
thing.
Anyway,
hey, let's talk about the Bank of Canada today. So, is the Bank of Canada going to pull RBA rate decision today?
Well, the expectations have shifted quite a bit. We were for until the RBA, it was like a very strong percentage for a hold, and only a minor percentage for a move of 25, and it's gone even Stevens 50-50 nearly for each decision. So the expectations have shifted. Data as well, we spoke about that. The data could be supportive for a hike, and then the RBA surprise could also be one, despite McLem having been very strongly advocating for a pause. They may be a bit RBA style forced to hike another 25. I've been talking extensively about that on the flow show as well.
So, if they do it, and this is just, looking at the dollar CAD and looking at this consolidation that's been taking place now, literally for, 6 or 8 months, we could be trading at the lower end of this triangle consolidation down at 133, probably pretty easily. And this is obviously going to be very, very critical support as you get down here, because, then you start dealing with a bunch of horizontal levels. Break above 133 would be really quite bearish. And I have a hard time getting my head wrapped around this move, like getting much below these levels without a complementary move in crude oil. And crude's been, obviously just kind of capped at $74-$75. So I don't know. That's my thought there on the Canadian. Do you see much upside in the dollar CAD? Because you look at the Aussie, and the Aussie has rallied, and it had a decent rally back to the 200-day moving average today, but oops, let me move this
and
over.
Also it also went back above the 61.8 of the May decline, right? So
yeah, right there. Yeah,
it's still
it wants the stops there. Up there, I think.
Yeah, I was thinking about 67, 25, 40 to be possible on the Aussie, but on the dollar CAD, I really think it's been defying the laws of gravity, right? If you look at that move in the dollar CAD and in Canadian pairs, as you look at the Euro CAD, has been absolutely hammered, right?
Yeah, it has, and we've seen a really, really nice decline, in the dollar. Now, if you're just looking at all this, obviously we're going to be approaching a lot of support here too. I mean, the dollar CAD's at 133, the euro CAD, you know, and this, by the way, it says 161% extension. That is completely irrelevant right now because that was on the way up. It's not relevant on the way back down. So just, you know, if you understand extensions, just a quick.
And if you look at both, like very simply looking at both dollar CAD and euro CAD, if you start to break that 142.40 in the euro CAD, and if you start 30.40, let's say, and if you start to break 133 figure a quarter in dollar CAD, there's a few gaping holes below there, right?
Yeah, I mean, yeah, just taking a real quick look, just because I hadn't had my eye on the euro CAD. I know you guys in the ForexAnalytix chat room, I know you guys look at the euro CAD. There's a whole we talk about so much in our chat rooms, but some people focus on different pairs, and I know you guys have been focusing on this one too. I mean, this is the first time I've looked at it in a while. The 38% retracement is right there as well. So yeah, that's going to be really important alongside with that dollar CAD at 133.
And then if you look at the CAD yen, you've got 104.2050, which is we are testing as well. Just
yes, this is a huge level of resistance here. Yeah,
there's really decent levels in the Canada, not far from where we are now, right?
Yeah, really.
In case there's a price on the hawkish side, right? That is, if they would go dovish, or if McClem goes all mellow, then we may be in for a bit of a reversal in Canada as well. So I think it's going to move, and then you add the kicker on Friday for another Canadian labor report. So I really think this week is going to be important for the Canadian dollar.
Yeah, that's some great points. And yeah, remember this week, as Kman pointed out, is going to be a lone Canadian jobs report, because they did not release their jobs report when sometimes they do on our NFP time. So yeah, good looks. Dale, Steve, Stelios, any views on the Canadian here that you guys have?
Seems like the central bank has it in a band. Maybe this is their intention.
You know, I was the thing that we're seeing, and this is you know what happened with this is the scary thing about central banks right now. And I was talking to Dick Matthews of Partis FX yesterday, and he's like, and he said something which, you know, is true because of what happened with the RBA this week, and which is happening with a lot of central banks, is these pauses end up, it could turn into a skip, right? So same thing with the Fed. If the Fed, you know, pauses rates next week, as you know, the market is, I want to say, you know, is what, there's a 25% chance of a hike. That's what the WARP was telling us yesterday. So yeah, if there's a 25% chance of a hike, we don't hike, the market may misinterpret that as we're actually pivoting, where it ends up being just a pause or a skip, as everybody's talking about, and which we're obviously seeing in the RBA, possibly the Bank of Canada. And I guess
now they're playing hopscotch.
They are playing hopscotch, or, you know, like if you're skipping a stone on, you know, across the water. So
skip to the loo, my darling.
Yeah. Now, Dale, there is only 3 people that actually heard that and understood that song, just so you know, that's listening in right now.
I barely remember this.
Right. So we have the Bank of Canada. We have the trade balance actually here in a few minutes, but we have the BOC rate decision here in about an hour and a half. Just FYI. Couple
Guys,
other things.
One thing I want to say about the BOC is that the market's not expecting a hike. Having said that, if you see the year-on-year inflation in Canada has dropped from 8% down to 4 and a bit, but last print, it was the first print where it increased from the last print. So that is something the BOC is going to be looking at, because let's face it, they saw inflation, just like the Fed, go up kind of in a straight line, and then it started going down a straight line. The question is, where does it plateau? Where does it find the bottom? And you know, I don't think it's going to affect their the decision today. But and I do think that they're not going to hike. But this is something that is definitely the BOC might be worried about if inflation remains stickier than, say, the US is. So just to have it in your radar. And also, I think USD CAD is, you showed it, is very close to trendline support. It's about 90 pips away. I know it's, you know, a big figure, but still that can get taken out in a day if there's any kind of surprise or any kind of hawkish indication. So what do I think is going to happen? I think eventually this trend line is going to get broken to the downside. Will there be one more leg towards the upside resistance? Maybe, but I think that's going to get broken. And when it does, there's a lot of clean air below.
Wow. All right. So another Canadian bull in the house. So we'll see what happens today. Following the Bank of Canada. I want to talk real quick, just talk about the S&P here. I was looking at this like little diamond formation that we're setting up now. Typically you get a reversal here. It could be a reversal lower, but I have to say, you know, equities are holding up very well. I think by the end of the week, it's going to be pretty important what happens here in equities. But you can't ignore the fact that we're just holding these gains. And that's something that, you know, I think the longer we sit up here, the longer the market forces a squeeze. We are at the 127% extension, or very close to the 127% extension of this move lower. We are near the 618 retracement and horizontal resistance, and really a break above 43.20 would put, you know, the 4,400 level right back in play, and that would be a really big breakout, because then you start trading, you know, higher highs and we're already doing higher lows, but you really could see an extension of this move, because this would almost be like an equal leg type of move here. So some big moves still brewing in the equity markets. As you can see, this would be the equal leg move, just so you guys can all see it. Say, oh, okay, I see that the equal legs, that would be them. So I think it's still, you know, we have to pay attention to how bullish it is. Hey, there was some moves in the Nikkei overnight, and also in the yen sold off just a little bit, but we're still consolidating in a bullish consolidation here. But the Nikkei, if you guys didn't catch this really big move overnight, and I had a friend of mine reach out to me that
rollover's over.
Yeah, he reached out to me and he's like, I think that move was, you know, predicated a lot on the you know, the yen and the Turkish lira yen, which came under a lot of pressure last night. But yeah, what do you make of this move in Japan, or do you make anything of it, guys? I mean, it's obviously bullish. Warren Buffett bullish.
Yeah, I've posted something in the newsroom earlier today. The Japanese government, it's not like there's no plan to do it, but they would like to buy out the ETF holdings of the Bank of Japan to redistribute them to the younger generation. And
wait, that's funny. I think I posted the exact same thing.
Yeah, you posted it like a bit after me. If you scroll up, I've posted it in the morning as well. Exactly the same one. Yeah, don't worry about it.
Yeah, I was
and I reckon when that hit the market must have thought about, hey, if they redistribute ETFs, then that younger generation will probably sell some of it. And I think it may just have sparked this setback. It just may, you know, when the market is very long and buying stuff, and then all of a sudden there is something like that coming out, they go like, hey, hang on a minute, what's going on here? And it may be some kind of the reaction to it. I haven't seen anything really else. So
yeah, wouldn't that be a coincidence? But at the same time, Kman, and I was chatting with my buddy about that article actually, and it was and I mean, Japan is known for doing weird things like policy like yield curve control. I mean, right?
Yeah.
Yeah, so that's it's interesting. You know, we should probably just really quick. I know it shouldn't be a market mover, but let's take a look at the Canadian trade balance numbers. I'm just going to pull over the data flash really quick and flop that on over here.
That was on an estimate of a deficit of 70.
Great.
It's a good number.
Yeah, CAD a little better, but like it's still like small amounts on the net.
Yeah, ain't gonna influence the market much ahead of the BOC, unfortunately. So all right, well we just had that data come out. Dale, is your person that you're interviewing here?
Yes, Steve Clapham is here.
Oh, good. Okay, Steve's here. Great, fantastic. I want to say thanks everybody for joining us today. If you're out there trading the Bank of Canada in an hour and a half, best of luck to you. And you know, and for all of you trading everything, best of luck to you as well. Hope you can navigate throughout the week. And a better place to do it is in the ForexAnalytix community. So come join us there. Steve, Stelios, Dale, Kman, thank you guys for your time. And yep, and Dale, will pass it over to you.
All right, thanks, Blake. Don't think about it, just do it.
There
Right, Laura? All right, Mr. Steve Clapham, who is an author. You guys have to check Steve Alkett on his mailing list. He provides a lot of great insights to what's going on. Welcome back, buddy. How are you, Steve?
Well, I'm very well. It's unusual in London because it's a beautiful sunny day, and I went got my lunch. I thought, you know what, I'm just going to eat my lunch outside. So I took the Financial Times, and I was sitting there by the canal, eating my lunch, reading the FT, and I thought, you know what, I can't really be bothered going back into the office. And then I thought, oh shoot, I better run because I've got Dale. So I got here just in time.
Steve, gosh, you know,
but
you
no,
could have taken the day off.
It's such a rare event that I get to come on the show, and it's such a rare event that it's sunshine.
I thought a sunny day in London is a rare event.
Yeah, well, and the two things together,
it's overwhelming.
Never happened before.
Yeah, it's almost like I don't know, the debt ceiling, and then Biden getting on camera, and underneath it says "crisis averted."
Yes.
Did that remind you of anything, Steve, when you saw that crisis averted?
Well,
to me, go ahead.
I've written about this, and I thought it was really bizarre how people were so worried. And, you know, I went to Omaha this year for the very first time, and Buffett was talking about he bought $3 billion of the short-dated yield at a 5 handle. And he said, you know, this is attributed to the debt ceiling problem. And I said, well, you know, we've only ever had this once and it got solved. And won't it get solved again? I just didn't really understand why people thought, oh, is America going to give up on its responsibilities? I mean, I know that there's a lot of political argument over on your side of the Atlantic. I mean,
it's never been like this.
But I mean, it just seemed inconceivable to me that it was that much of a worry that people didn't want to buy short-dated treasuries. I mean, it makes no sense. But you know what? The older I get, the more I learn about how little I know and how stupid the markets can be. And therein lies the opportunity for sensible people.
Yeah. The herds run, the lemmings walk off the cliff together, and we recognize things in the market well before the markets do. I was reading a tweet by a pretty famous trader, and he said his big macro ideas always took so long to happen and destroyed everything in his life till it happened, and then he wasn't there. So he just trades the moves now instead of being a macro guy.
Yeah.
So anyway, in this environment, stocks still acting good. Bonds. I want to ask you about the bonds here, Steve. So,
well, can we start in Japan? Because when I came in, you were talking about Japan, and I learned something really interesting recently. So one of the European asset managers has an investor day in an afternoon in a swanky London Mayfair hotel, and I went along. And what it is they have, I don't know, their fund managers from, I don't know, maybe a dozen funds do a presentation to a small group, like 10 people or 20 people, over and over through the afternoon. So you can go and listen to a bunch of fund managers trying to persuade you to invest in their fund. And the first one I went to, I sat next to the chief executive of the company, and it was a Japanese fund. And it was quite an older, I mean, almost as old as me, fund manager, obviously very experienced. And he looked slightly nervous because his CEO was in the room. But he said something really, really fascinating. So this was a small fund. It's about $150 million. But the manager, I mean, he is quite old. And he said that the latest development in Japan is an edict from the Tokyo Stock Exchange, which is, you know, it's had a mission for some time to improve governance and make Japan more attractive destination for investment. But this development is an edict which requires companies whose stock is trading at below book value to publish a plan to improve their valuations. Now, the problem with Japan for years and years has been, you know, they might be sitting on a massively valuable asset, but they won't do anything with it. I remember one media company which had a property which was worth more than the market cap. And when asked, they, you know, well, why don't you sell the property and buy all your stock back? You know, oh, well, it's a very prestigious property. You know, I wouldn't want to move. So that, you know, they completely ignored stock market pressure, but now they'll have to explain why their stock is below book value and what they plan to do about it. What's really interesting about this is that this manager thinks that, well, I'll let you guess, Dale, what percentage of Japanese stocks do you think trade below book value?
None.
50%.
Oh, okay.
And this
Is
guy
that
owns,
why we're getting all these parabolic moves here?
well, I don't know. I mean,
what's behind this?
Well,
So no wonder that guy is holding investment seminars and renting fancy hotel rooms, because there's nothing like a parabolic move to get investors to come late to the party, or at least late short term to the party. But this is a PR right here for that guy.
Yeah,
right.
Well, I think that's a combination of things. So one thing is that the foreigners have been, until the first quarter of this year, have been net sellers in Japan. And the largest buyer in Japan has been the corporate buyer. It's been buybacks. Of this guy's portfolio, he's got 50 stocks in his portfolio. 8 began buybacks for the very first time in Q4 22. And the corporates are already the big net buyer of equities. And it may just be that the selling has started to dry up. You've had Buffett waxing lyrical about Japan. The foreigners may have stopped selling because it's the cheapest market in the world. And if people think that they are going to buy back their stock, this is what David Einhorn was talking about. So David Einhorn was presenting in London at a conference maybe 3 weeks ago. And he was saying that his strategy has fundamentally changed. He said, he was talking about there aren't enough value investors out there now. And typically what he used to do, he had a very similar strategy to me, or perhaps I had a very similar strategy to him. But what we used to do was we used to find stocks whose earnings had been underestimated by the market. We used to buy them, wait for the street to catch on that their earnings were going to beat, and then the stock would be re-rated. And this was a very surefire way to make money if you were, you know, a detailed analyst like me or Einhorn's team, because we would be digging around. We'd find a stock that we had high confidence that the earnings were underestimated, it would then come, it might take a quarter or two for it to start beating, but the estimates would go up. Now, if your estimates go up by 15%, the stock will go up by 30% because you also get a benefit in the rating. And what Einhorn was saying when he was in London is that this doesn't work anymore because there aren't enough value buyers around, particularly in the sort of lower end of the market. So what he's now doing is he'll buy something, it'll beat, but nobody will care. And what he's saying is that, you'll buy something that's on 15 times earnings, it'll have a beat, but it'll get derated to 12 times because nobody's interested. So now he's got a different strategy. What he's doing is he's buying stocks where he doesn't need another investor to come in and buy the stock and re-rate it, because the company itself is resolved to do buybacks. And he said that he said it's a much easier situation because even if you don't get the forecast right, he says he's had situations where the company has missed, and it's missed by 10%, and nobody's even noticed. The stock has barely gone down. And this new idea that we should pay more attention to the corporate buyer as the buyer of last resort, I think is quite an intriguing one. And it is definitely already happening in Japan. Whether, to what extent it has caused that parabolic move up.
Didn't they own a big chunk? Didn't the government or the Treasury or the central bank have been a big buyer of Japanese stocks for a long time? They came in and supported the market. So, this must have been a huge payday for the government.
Yeah, well, I suspect that what's happened is, so the Japanese government's been buying a lot of ETFs, and probably what's happened is that the selling has mopped up, and the Japanese, the retail is a big part of their market, and the retail they move. I mean, you think the US market is herd behavior, man? Japan, they move together. And this could just be the Japanese domestic consumer or Japanese domestic investor saying, you know what, we think Japan's cheap now. And it's had a breakout. And I think that's what's happened is that the market's broken out. And I don't remember, is it a 30-year or 35-year trend?
Topped in 89.
89. So what's that? That's 34 years, right? So
there you go. Right here, back here.
Yeah.
So everyone's saying we're on our way back to those highs.
Well, I mean, there's one of those highs that has actually broken, hasn't it?
Well, the Nikkei high is up here.
Okay, I think there's another. I've forgotten which measure it was, but I think we were very close.
But here's 89. You see it to the left?
Yeah.
Right there. So that was higher.
Okay.
Okay.
Well,
but I mean, huge move.
Yeah.
I'll tell you what, short term, I wouldn't go to that. I wouldn't join that guy's fund for a month or so. You're getting a key reversal while we're talking, and they're done over there, right? That's not a good sign.
No,
we could pull back 3,000 points.
Yeah, no, I think you could easily see a big pullback, absolutely. But
Do you think it has anything to do with yield control or maybe a shift coming from the central bank at all, Steve?
Well, I don't know. They've got a
new governor.
The new governor, and maybe.
Yeah.
I mean, I don't follow it that closely daily, day to day. Maybe the new governor said something.
Oh yeah, you follow the BOE. It's much more interesting, isn't it?
Well, the BOEs. I mean, the trouble with the Japanese is they never say anything, right? So, you can follow them for years, and it takes years before they say anything of interest. Whereas at least in England, they're constantly putting their foot in their mouth, and constantly screwing up. I don't actually have a huge amount of time for our current Bank of England governor. I don't think he's doing. I don't think he's doing a great job. I think he's really political, and his appointment was political. I don't think he's the right person. He's an intellectual. I miss our days of Mervyn King, who I thought was a really was somebody that I had a lot more time and respect for. But Mervyn King is now running the operations of one of the oligarchs. So he's chairman of this company, which is owned by two oligarchs, one of whom is on the banned list. So he's had to step back, and Mervyn King's gone in as the chairman and is earning several $1 million a year for being handling the board, which I thought was quite amusing. It was
whatever he's not doing, cable is outperforming euro for quite some time now, going back to the beginning of the year. Any explanation? Are things that much worse on the continent than across the channel?
No,
why the divergence in, it outperforms when the dollar's weaker on the upside, and it holds up better when the dollar's rallying than the euro does. So why are funds flowing into the pound rather than euro?
Have you looked at the pound? The pound has kept pace. If you go back 25 years or 30 years on the pound and compare the pound and the South African rand, the pound and the South African rand have kept pace over the last 30 odd years. And I just looked at this by coincidence the other day, because I was wondering why the South African wine that I like has gone up so much in sterling. And I thought, well, it's impossible, because we must have appreciated hugely against South African rand. But it turns out that we're broadly where we were in the mid-90s. And I think that's like incredible, because the South African rand has been flushed down the toilet. And the sterling has been flushed down the toilet as well. And yeah, I mean, I think we've done a crap job in running our country. But I don't think we're quite that bad. And the idea that we should be approaching parity with the dollar, we got to 103 at the bottom, I thought was just insane. And at 125, I mean, I think sterling's cheap. I said this to you last time I was on, and it was, I don't know, between 115 and 120 then. I don't remember exactly. And I mean, I think that if you look at, purchasing power parity type of idea, that $1.50 is about the right level for sterling. Maybe it's $1.40, but it's still, 10-15% up from here. And Europe is not in good shape. Europe really isn't in good shape. I think Germany, which is basically the powerhouse of Europe, has got all sorts of problems. I mean, huge problems. Partly energy, partly the Ukraine situation, partly that it's got a very heavy dependence on the automotive sector, on the middle stand, the small companies. It's full of problems, Germany, and it's the best country in Europe. You look at France; they're rioting because they're talking about putting the pension age up.
Right.
I mean, they've got the absolutely best conditions in Europe, French workers, and any relaxation of their benefits, they start rioting in the streets. And then you get to Italy. I mean, Italy, there's a lot of cash in Italy, but they don't pay their taxes. It's got a very, very good infrastructure now, as has Spain. The European Commission has dedicated a lot of funds to them improving their infrastructure. But their economy, I don't think the Italian economy is that in good shape at all.
No, their banks are supposedly zombie banks, all of them. And recently a pasta shortage in Italy. So that was a crisis. They were out on the street. So in France, it's because of benefits, and in Italy, it's because of a pasta shortage.
We didn't see that. How can there be a pasta shortage?
I read about how the pasta there was because of supply chain.
Oh, come on.
Pasta shortage in Italy. Check it out.
No.
Yeah, go down there with some noodles, and the women will be all over you.
Man, they all make their own pasta in Italy.
And anyway, maybe it's the ingredients, or maybe I read
make
some
pasta.
kind of phony article that I'm disseminating.
Dale, does your wife not let you in your kitchen? You only need.
I don't want to go in the kitchen.
I see. Okay. Well, pasta is very simple to make.
Yeah, for my snacks.
Eggs, flour, and water. So that's it.
Okay, I'm just telling you what I heard.
Oh, see, CNBC. Okay.
I don't think it was CNBC.
Yeah, no, somebody's put it in the chat. I'm going to pasta prices rose by 17.5% in March and 16.5% in April. Well, food everywhere is going up through the roof, isn't it?
Okay.
But I wouldn't have thought that was such a big deal in Italy, because they all make their own pasta.
We have a very smart audience. They're hip to everything. So you didn't think it was possible? There we go.
Yeah, well, there we go. Yeah, you learn something new every day, and I always learn something new when I come on your show.
Yeah, and you're getting press for your favorite wine, and so it's happening to everybody.
Well, the wine, don't talk about it, because the wine is the wine has become so expensive here because the pound is so weak. And in actual fact, there's a bit of a resurgence in manufacturing of wine in England, but it still remains very, 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 very expensive. But
you really don't have the climate for wine, do you?
It doesn't need to be that. I mean, depends on what sort of grapes you're growing. I mean, I personally, I'm not a massive fan of English wine, and it's very overpriced. Same with American wine. I mean, there are some good American wines, but boy, do they charge. I mean, they're very, very expensive in my view. And you're much better off with, I see you guys are good. Argentinian, Chilean. Yeah, so I think Argentinian wine is...
See how we're helping you? We're providing wine content for you.
Yeah, well, that's much appreciated.
Anyway, I'm wondering what you and your company are telling people to do in this environment. Should people really be risk averse in here, or aggressive? And, what are you saying to people? Because I mean, a lot of people are confused with what's going on.
I wish that I could tell you that there was no confusion in my office, but you know what? I think it's a very uncertain time. I mean, last time if we'd had that discussion, I would have said that we should be very concerned about the economy, and I'm puzzled a little bit as to why those fears haven't manifested themselves. I mean, if you think about I think there's all sorts of weird stuff going on. So there's lots of cheap stocks. That's the good news. But there's also lots of weirdness. So if you had said to me in January 2022, the Fed funds rate will be where it is in June 2023, where do you think the house builders will be in the US?
Yeah, the home builders, yeah.
The home builders. Right. Yeah. I'd have said they'd be flat on their back. Yeah. But they're doing really, really well.
Yeah.
And okay, so there's a bit of confusion there because it seems that, people are locked into their cheap mortgages, so they don't want to move. So if you want to buy a new, if you want to move, you've got to buy a new home. So, yeah, but, there's kind of a lot of second order effects happening that you wouldn't, I reckon I'm reasonably good at
rates have never gone up this fast, this quickly, in this magnitude ever.
And so you would imagine that
there would be lots of repercussions besides SVB.
And the repercussions haven't yet happened. largely. And I think that the markets are becoming quite complacent on the back of that because they assume that they're not going to happen. And what I've learned over the years, Dale, is that the one thing that everybody underestimates is the time lags in the system.
You're right.
And I think that, people are saying, oh, we don't need to worry about X, we don't need to worry about Y. And just at the point that they get complacent and they start to buy more, that's when it will all start to unravel.
Well, doesn't 14 VIX say that is exactly what's happening?
Yeah. So people are complacent, right?
Yeah. I mean, can you I guess VIX could go to 10.
Yeah.
But I'd call this pretty complacent. This is a lower reading than at the highs in 2020, at the end of 2020, 21. So for the decline in 2022. So a lot of complacency. So I guess that makes when and if there is a shock, the magnitude of it is going to be larger because there are more people off sides and not prepared and just, playing musical chairs right now.
Yeah. And markets are higher.
Yeah.
So, I'm pretty cautious because, I mean, just looking at something the other day, S&P put a thing about speculative grade debt. And, there is a lot of debt in the system. And we haven't really had the downturn that we were expecting. But I'll tell you what.
We haven't had the solvency part of it, the credit crisis part of it.
And that surely comes because the interest rates are higher. And so what happens is, so you may not want to move house because you've got a cheap mortgage and you don't want to lose that. But companies don't have fixed rate debt forever. So
no, they don't.
So I think a lot of debt is going to start maturing in the next 3-4 years. And that's going to really put a big amount of pressure on a lot of companies. And what I think it's easy to forget is that the amount of companies in the US that are quoted today is at an all-time low. There's far more private companies than there ever have been. And they're not visible. And that's where the problems are going to be.
Okay. All right. Well, Steve, so you stay in cash, mainly cash.
Well, having said that, we are finding lots of cheap stocks.
Okay.
So,
all right.
I mean,
like uranium popped this last week or this week. There are things that are coming to life. I guess we could wrap it with this. The bears argument is that it has been very concentrated, only 10 stocks leading the way. And the bulls argument is it's going to broaden out, which seems to be happening in some ways. Do you agree?
Well, if it broadens out, I'll believe in it more. But
okay,
I don't.
So you haven't witnessed it broadening out yet.
No, and so you know, I think it's one of these things. When I see it, I'll believe it.
You're from Missouri. You're the show me state.
Oh, is that where they, yeah.
Yeah. So Steve, I really appreciate you, giving up part of your nice sunny day and lunch to come and have a conversation with me today.
It's always a pleasure to speak to you. I'm heading back out to sit by the canal. They've got a little truck that's parked up, and you can go and get a glass of bubbly. So I'm going to do that while you guys are working hard.
While we're perspiring and biting our fingernails. Well, let me give you a British saying as you go out there. Cheers, mate.
Cheers. Oh, somebody's asking for my Twitter address. So
yeah,
you can find me at behindthebalancesheet.com, and on Twitter I'm at Steve Clapham, CLAPHAM. But behindthebalancesheet.com, all the links are there.
A lot of wisdom from Steve, so check him out.
Thank you so much.
Appreciate it, buddy.
Take care. Cheers.
Thank you, Steve.
Thank
So
you.
that's a wrap. That's a wrap, everyone. You could join the team in 15 minutes on the morning edge. And we'll see you all tomorrow. Remember, don't just count your pips, count your blessings. Tell the people you love that you do. They're not mind readers. Clap them. CLAPHAM, Richard. Clap them. All right. You're welcome, everyone. See you tomorrow. Adios.